Let's make a quick trading recap of a long that was taken yesterday. Pretty clean long. But first, let's look at the high time frame, because Sol also produced a very good swing opportunity in which price was trending down, so you can pull your range from low to high. Then you take out your high and form kind of like a 1-2 model 2 distribution, hitting the technical target. But for now, I'm focusing on the long, which was here, tap 1. Price takes out your range low within the deviation threshold, comes back in your range, so this is your tap 2. And then for the model 2, you form a higher low instead of a model 1 where you make a new low. And here you can see that price pushed up, came down, and then an aggressive push up, leaving behind this clean OBIM, which is your last demand, protecting price from going lower. And you can see that price perfectly taps into that zone, breaks structure back to bullish right here. This is like the first break, it's technically valid, but yeah, you can also say it's, to be really sure, is that aggressive break right here. But yeah, as soon as you come back in your range and you break structure back to bullish, this was your valid 2-tap, signaling that this model 2 accumulation was valid. And you can also look at the extra confirmation. Is it in your volume profile? Then you can see that your value area low is already at this lowest point. So at this point you are also in your value area. Here you even break above your point of control, so that's the full confirmation. Then is there a good return to zone? Yes, there's a very good return to zone, because these are all highs that are already taken out, the liquidity, the supply, so that makes it for an easy return back up to the highs. So this was a swing long. You could have, if you was conservative, long there, stop loss below your third tap, target the range high. And you can see that this week we hit that target. But that's all nice. Now we go into the lower time frames, because let's see, from here we have price basically from this low trending up like this, making a high. So the overall trend is bullish. And since this week, like, let's see, yeah, this was Monday. Now we made a new high on Tuesday. So at this point, it was pretty likely that structure was bullish, that this was our weekly low, this was our weekly high. So then we know statistics also show us that it's likely to make new weekly highs. So at this point, what is our more local structure? You can look at the structure from this low to here. But let's skip some points. Is this right here to this high right here. And you can see what is the last push that brings us into that massive pump. That is these 3 sell candles and an aggressive push. So you know, sellers, buyers stepped in at this point, pushing price into new weekly highs. So if price comes back for that, buyers will defend this level. Also because it is your structure. So if you break below this, that's not a good sign, because if you have a strong push like this, buyers will defend their positions and likely push price higher again. So this is pretty clean invalidation, where you know, okay, if this level was lost again, that's a bearish sign. So you can even divide it in lower levels, where you have this is structure demand, where you have 3 candles going down, strong push up. But you can also say this is your more refined demand, and then at the lowest part you see that last candle, this is also even more refined demand. And then you have 3 clean PY levels you want to see a reaction from. So then you can go to the lower time frame, clean invalidation, which is below this, and then you can look what is happening. So here you see that overall bullish is of course bullish, the overall structure is bullish, but from here you can see that price is trending down. And always when you have a clean low like this and you sweep that, my mind automatically thinks, can this be an accumulation? Because if you're trending down, you can pull your range from low to high right there. And then look for sweeps of either your high for distributions or your low for accumulations. But since the overall trend is bullish, the main priority is to look for accumulations. So at this point, you see that price right here. Let's go to the 3 minute. You have your low. So this is your tap 1 at the low, tap 1 at the high. And price comes down with this structured move, low, lower high, lower low, lower high, lower low, lower high, lower low. Here you take out your range low into demand and price comes back up. The moment you come back into your demand, into your range, that shows that this is a deviation move and not a range breakdown. And also because you are staying within your deviation threshold. So at this point, price comes back into your range right here. This can be your tap 2. Technically, you can extend your range to that lowest point right there. Then now you have 1, 2. Now you know, okay, this can potentially be a model, an accumulation model in the making. And you can either look for a model 2, which is a higher low play, so like this, with a structure break, or a model 1 in which you make a new low. So that are two scenarios I pointed out in the group. Right here, local scalp long PYs for Sol, should not lose the lower PY, else it can get ugly. So clean invalidation to look for longs around that zone, break below, and shorts are back on the table. So this is what I shared, where we had tap 1, tap 2. Either you tap demand, flip structure back to bullish, then you have a model 2, or you tap that lower demand I pointed out right here for a model 1. And if we look here, what did price do? Price pushed up, came down with a structured move, lower low, lower high, lower low, lower high, lower low, push back up. Here you break structure, back to bullish, in your range. Let's see, volume profile right there, till here. Here you see value area low is right here. So here you have a clean break of structure right there. Bullish buzz in your value area, extra confluence. So this is a valid long to take it on the break structure. Stop below the low, which is your third tap by now. Your technical target is the local range high, which is this level right there for 2.6 hour trade. And then you can also say this is your structure is bullish, so you can target the high, which was my second TP, or at least my last TP. But here we tapped the range high. I had some more running until here, but price took out this extreme liquidity right there. Let's get liquidity, and then price sold off, and right now we are taking the lows again. So this was a super nice local trade, local model 1. As we see this week over and over, Bitcoin also produced it over and over. Gold, every asset basically. So right now, what am I looking for? As next trade, I shared a very similar idea in the group again, where you can now say, here you are locally trending down, here you at the low. What I'm looking at right now is this range low, range high, swept the range low. Can this be another model 2 or model 1 in the making? Do we have clean demand for the model 2? Let's see. On the 2 minute, you can see going down, going up, leaving an imbalance behind. So here we have structure demand at the range low, which is also always a clean POI to look at for the model 2, as you can see here. So let's extend the range there. So what I would like to see for a long on Sol is maybe push up into this supply, reject from there, then slowly come back into this demand right here, break structure back to bullish, long it back to those highs, in which we have a nice 1, 2, 3 tap back to the range highs. And you can potentially also target new weekly highs, because if we look at the statistics, I can show them right now, but it's very, very likely for Solana to make new weekly highs. So in that case, you can extend your target to that wick high, potentially a bit higher. So that are now the plans for Sol. You can also, of course, go for a Model 1, because I see that there's some demand left behind here as well. So what could also happen is that we reject here, come back into this demand below, let's see, below the range, stay within your deviation threshold, then reclaim the range, and then you have your Model 1, similar as we had right here, but then in a bigger fashion. What can of course also happen is that you just invalidate it, or you already push higher, but in that case I don't have a long setup. So yeah, that's the plan, was the recap. If you have any questions, let me know. Thanks for watching, don't forget to leave a like, and cheers.